We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. They always have been, but it's been increasing over the last 50 years since the government has been bigger. Hey guys, what's going on? Jebb here, and welcome back to Coffee and Crypto. This is your morning of Bitcoin and cryptocurrency technical, on-chain, and fundamental analysis show where we bring you the latest in these markets. Today, we're going to be talking about the drop that we've just witnessed on Bitcoin. As you may know, Bitcoin dropped down to $28,000, almost even last night. It's currently trading at $28,800. Ethereum dropped down to $1,800. Could this be the beginning of our drop down to $22,000 that we've talked about? Or is this a bear trap that could be setting us up for a bull trap that would then drive us down to $22,000 here in a couple of months? We're going to be talking about how we've broken bearish out of our symmetrical triangle pattern down on the 4-hourly chart that we were taking a look at. We're going to be talking about some updates to some very important indicators that we are big fans of. And we're also going to be talking about how the mainstream and cryptocurrency media has been flooding the space with positive news. Could that be a manipulative story, a manipulative event, trying to manipulate the market to the upside? Or could it just be that there's a lot of good news today? Could it be that the media is trying to create a big bull trap so that people get squeezed out? Long squeeze comes in and drops the market so the media and the funds that own the media could buy the dip and buy back in lower? Perhaps. We're going to talk about all of these amazing bullish articles and more in today's episode of Coffee and Crypto Live. If you enjoyed today's show, hit that like button, subscribe to the channel, tune in at 10 a.m. Eastern every single weekday, and don't miss a single show because we are bringing you the highest quality technical, on-chain, and fundamental analysis in the cryptocurrency space. But I am joined, as always, by my co-host, T.A. Tim. How you doing, Tim?
What's up, everybody? You know, actually, Jebb, correction. It didn't crash to 28 last night. It did it like literally 45 minutes ago.
45 minutes ago, that's
yeah,
true.
they're at 9:15.
That is true.
When we were titling the video, it was literally
at
crashing. It hadn't got down to 28 yet. So we're like, okay, you know, we'll talk about this. But just so you guys know, and I'm going to talk about this when we get into TA, you know, there's interesting things happening there. Someone even commented, I think, on Twitter saying something to me about, you know, like, oh, are charts even useful right now in a season of manipulation? I'm like, oh, absolutely it is, because without having these charts and these lines and these things we put up, you could not see the degree of manipulation that is happening right now. So I can't wait to jump into TA and give my thoughts there and us unpack what is happening on the charts. But it has been a very volatile last hour here in Bitcoin.
That's right.
Really interesting.
Yeah, absolutely it has. Guys, we already got 650 people watching. If you're going to enjoy today's show, or if you are already enjoying today's show, if you're looking forward to today's show, or if you metabolize oxygen, so that means all of you, make sure to hit that like button. Let's see if we can get to 250 likes before we jump into Market Pulse here in the next 3 minutes. I am also joined, as always, by Smay. How you doing, Smay?
Hello, everybody. I'm doing great. The Celtics won last night. They have one more game until they're in the NBA Finals.
Woo!
Woo! I'm really happy about that one. That's
going to the FIFA World Cup.
It's gonna feel good.
Let's go.
Anyways, that's all I have to say. Back to you, Jebb.
All right, guys. Well, we're about to jump into our Market Pulse, but I do want to bring you a word from one of our sponsors. Their name is Link2, and I actually just had the pleasure of interviewing one of their executives yesterday. His name's Joe. You guys will be seeing that video in a little bit. We'd like to give a shout out to them. They are one of our sponsors. They are Link2, linqto.com. They have a very, very interesting service. They offer the average investor access to the world's top unicorns, aka private companies with greater than $1 billion in valuation. Traditionally, only 2% of the world's accredited investors have had access to private markets, and those elite investors make an average investment of almost $8 million. But Link2 is democratizing private investment by offering private shares of companies like Ripple, Uphold, Dapper Labs, BitPay, and BlockFi. Right now, they're invested in 41 different unicorns. Given pending recessions, inflation, volatility of public equities markets, crashes like Luna, investors are looking for other places to invest their money. Well, Link2 has a great track record of investing in companies that went public. Coinbase, Robinhood, SoFi, Marqeta, Innovium, and a few others are different companies that they have invested in that have now gone public. To break down what they do, they are essentially a regulatory help and a liquidity provider to allow you, through going through the accreditation system, to get invested into a different private company stock before that stock goes public. Because here's the thing, guys. Everybody looks at the stock market and says, okay, it doesn't have the same kind of gains that crypto does. Well, the problem with that is that's not true. It's just that most of the gains that happen in a tech company or in what will become a stock happen before the company actually goes public. By the time it went public, the company's probably already worth $5 billion, and you've missed out on 90% of the gains that you'll ever get. By the time Coinbase went public, it was already worth $200 billion. You'd already missed out on all of that. But with Link2, you can invest in these private companies before they go public so that you're able to actually get a good deal and make a lot more money and make some money like these angel investors out there. So make sure you check them out. The link's in the description box down below. There are some really good deals there. NerdWallet is one that they're invested in. They're about to go public, and anyone who is on Link2 would have had access to them before that IPO, and they're probably about to make a lot of money because they use link2.com. Check them out down below. Anywho, we're going to go ahead and jump into our market pulse right now. Over on CoinMarketCap here, we can see Bitcoin is currently trading at $28,400. It is down 4.39% in the last 24 hours. Ethereum trading just below 1,800, down 10%. Again, it is definitely a red day. That is without question. Binance sliding down to number 5, dropping below USD coin again on the dip, sitting at 6.33% to the negative. XRP down 4%. Cardano down 6.5%. If you've watched the video that I uploaded a few days ago, you'll see that I have a prediction of 35 cents on Cardano. If we see Bitcoin drop down to about $20,000 to $22,000, and then we're going to more than likely see Cardano drop down into that range. We also see Solana sitting at $44, which is a pretty good discount. Polkadot sitting at $9. I've said that $6 would be a great place to scoop some of that up. We're about to read some green names, so I just want to go through some more of this market data here. Looking over at CoinMarketCap here, we can see that total cryptocurrency market capitalization currently sitting at $1.2 trillion. I showed you this, I believe, even in yesterday's show, but I want to remind you, because this is a really, really important point. It's not just Bitcoin's chart that we are seeing support built on, and it's not just Bitcoin's chart that we need to be paying attention to. And by the way, Lux Algo just got an update. We're going to show you this update because it's absolutely amazing. If you don't have Lux Algo, I've said it before, I'm going to say it today, I'm going to say it again. You are missing out. You are wasting money by not having Lux Algo if you do any kind of trading and investing. Check it out, link down below. Go ahead and turn that off for a second, though. Right now, we can see that the market is sitting upon this support at $1.2 trillion, actually at 1.15. That was set by an all-time high in total market capitalization. By the way, this is the total chart. Go to all. It won't show up in crypto, but if you go to all, type in total, then there's also total 1, total 2, and total 3. Total 2 excludes Bitcoin, total 3 excludes Bitcoin and ETH to show you altcoin market caps. Here on total, that just shows total crypto market capitalization. You can see this strong level of support right here that we're currently holding. If we break this strong level of support on market capitalization, the next place that we see the market go to is $776 billion, which was all-time high in the beginning of January at the end of the last bull market that took place in 2016-17. That would be a $20,000 Bitcoin, just so you know. If we start dropping below these levels in a strong way, we're probably going to go almost straight to 22. There's not a lot of support built in between there. We're about to jump into some technical analysis, but first, let's go ahead and read some green names. We got a bunch of people in chat that we want to shout out. Smay, take it away.
Oh.
Full screen.
Hello, everybody. It's time to read some green like the Celtics names.
Whoa!
Oh! All right, here we go. We have Matt C., Siobhan Goulet, Elliot Locke. Oh, Tom Crown's in the chat. What's up, Tom Crown?
Whoa, what's
Love
up,
that
Tom
guy.
Crown? Shout out to him for getting his channel back.
Crypto Sec Guy, Kasha Cats. Let's see here. Crypto Sarah, Colin McDonald, and that's what I'm seeing right now. I'm going to think of some more. Tom Wilkes, Groovy, Christopher Malvo, Grand Roofing Incorporated, Dennis Pizarka. I love all of you guys. Yeah. You guys are the best. You're the reasons why the Celtics won last night, and I'm very happy about it. Back to you, Jebb.
Absolutely. Well, guys, thank you so very much for tuning in. We got 300 likes already. I like to see it. I like to see it. A lot of times it would be a few more minutes into the show before we'd have that many likes. We got 1,400 people watching now. If you have just tuned in, we are about to talk about not only what Bitcoin is doing, because it is having a pretty big drop right now. We're going to talk about why we think that is occurring. We're also going to talk about whether or not we're about to go into a bear trap, followed by a bull trap, dropping us all the way down to $22,000 within the next 4 months and change. We got a lot to break down. down, and that's just in the first half of the show, because the second half, we have 6 different articles that we want to run through and then talk about whether or not mainstream media is trying to push a true, but they're trying to push a manipulative, bullish narrative to get Bitcoin to go up, then crash so that they can buy the dip and shake out more weak hands. We got a little bit of a tinfoil hat conspiracy that we're going to talk about later on in today's show. But first, we're going to jump on over to our technical analysis. So smash that like button if you just tuned in. Tim, let's start with you, because you have a theory about Bitcoin's movement over the next several months. And you and I would both agree on this. I think that we're seeing a 1, 2, 3, 4, 5 movement to the downside, a primary trend to the downside, which would be called a bear market. If we look over here on BLX, we can see what this trend would look like right here. And the reason why this would show up would be because we have support at $22,000 that's showing up from the 200 weekly simple moving average, as you all can see right here. That's the 20, not the 200. Why is that not giving me the right thing? Probably because I'm on the daily chart. There we go. Moving out to the weekly chart, you can see our support is down here at 22K. Then we also, going back to the daily chart, have this downtrending level of resistance here, and then this downtrending level of support right about here that it looks like we are currently bouncing off of. So there's a lot of different things going on the chart right now. You've talked about, Tim, about this wave 4 secondary corrective wave to the upside, and then another drop. Do you think that we're about to see another drop, or do you think we're actually going to bounce from these lows around 28, 29 back up to 38 and then have that drop? Do you stand by what you said earlier?
So first and foremost, I do absolutely still stand by what I said in the last couple of days. And there's some interesting things happening here. You know, for a minute, you do have to kind of explore the option. When we started seeing that price come down, you do have to start questioning, all right, was I wrong? Are we coming down? Here's the reason right now why I don't think I was wrong. And obviously, the price jumped back up. We can say in hindsight, oh, look, Tim, the price went back up. But Jebb, am I lying when we were sitting around the table and I said, I do not think that this is going to continue. I think we're about to rally back up. That's right. And the reason why is when you come down to some of these smaller charts, and I have my TD sequential up. You guys know recently I've been using TD sequential a whole heck of a lot, which, by the way, what chart was I just on that we had that 9 flash? Yeah, the hourly chart. Boom, look at that right there. But I'm going to turn that off while I make this point for you guys. Coming down to the 5-minute chart, look, yes, we did have volume here, but what you want to see when you confirm breakouts, because this was a breakout, you guys see this green line right here? That is that flat level of resistance we have been using now ever since we dipped down really low and then we came back up. If I come back to the hourly chart real quick and show you guys what I'm talking about, obviously dipped back up, came back in, but then look how many times we've used this line. 1, 2, 3, 4. This was the 5th time, only this time we broke it. Coming down to the 5-minute chart, yes, we had an uptick in volume, but I was watching it. It was not this high until the price started shooting back up. I said, I don't like that, and I like it, but I don't like it for the bears, because what you want to see when you break a key level of support or resistance and you're going to hold it is a massive uptick in volume that confirms and holds that pattern, but instead the volume confirmed as we started moving back up into it. So again, I called this back here as the price was down here around 28 or so. I actually thought we were going to dip down into the 27s, hit this blue line that actually you're going to find if I go out to my weekly chart. The significance of that blue line is a falling wedge on the long time frame. I thought we were going to actually I mean, that's pretty stinking close right there. But, you know, that's a zone. We got close, you know, but I thought we were going to go down in the 27s. However, we did not. We, in fact, shot back up. And here is what I think we're seeing right now. Notice that volume did come into the space, but other than this one red bar right there, this volume is actually in the backing of the confirmation. And everything we have been seeing recently in the news has been actually talking about fundamental reasons why Bitcoin is undervalued right now. So when I saw this start to happen, when I saw the price start to come down here, you know, our planning meeting, we were talking about the potential for here in a couple of months, a bull trap happening when potentially we head back up towards 37. But as I was watching this and I was watching the volume not move how I really thought it should move and not explode, I was saying, is this a bear trap? Because everything fundamentally right now is actually pointing towards a short-term upward movement for Bitcoin. Is this a bear trap to get a lot of people out? Are people going to wake up this morning, see this red candle, and say, oh no, I'm done, I'm out, it went below support, I'm going to sell. And there's going to be a bear trap, and then we're going to shoot back the upside. It's too early, definitely right now. We're only an hour removed from this big fall to say, oh, we're shooting up and we're going to break through this green line here by the end of the day. That's too early. But what we do have is confirmation this was, in fact, a bear trap. This was a shakeout to get a lot of new investors or people who have been sitting on the edge of their seat waiting for a breakout, either to the upside or the downside. This was a fake out to get a lot of people out of the market. And I still hold to my belief that we are moving up and to the right here over the next couple of weeks, if not a full 2 months, before then we set up that bull trap that a lot of bears are waiting for, and we shoot back down at least to 25,000, if not 22 or below.
Absolutely, guys. Well, let's go ahead and take a look at the chart from a perspective of the shorter term analysis and talk about where it might be going over the next little while. We also want to talk a little bit about, we're going to talk about that here in a second, but we also want to talk a little bit about this article over on Cointelegraph. As you guys know, the options market expires monthly, and right now Bitcoin is creeping towards $30,000. I believe at the time this article was written, it was creeping down to $30,000. Now it's trying to creep back up to $30,000. But data shows bears in favor for Friday's $1.8 billion Bitcoin options expiry. For the bulls to be in the positive, it looks like we would need to see a $35,000 Bitcoin. As you can see here on CoinGlass.com, $30,000 Bitcoin, which is roughly what we'll be at, or potentially even lower. We're at 29.1 right now. That would have a huge advantage for the bears. There are 2,050 calls that are buys and 11,200 puts or sells. The bears have a $250 million advantage if we end between $30,000 and $32,000. What's most likely is that this is going to close out with a $390 million favoring of the bears. 800 buys, 1,400 sells, 1,400 puts, 800 calls, if you will. The net result favors the bears by $400 million. So when these options expire, looks like the bears are going to stand to gain a lot, and they very well may turn around and use that as shorting fuel. And that would actually kind of make sense, because looking at CoinGlass again over here, looking at the last couple of days, you can see there's been a lot of long liquidation. We saw at 400 hours this morning, $116 million in longs get liquidated within the 60-minute period. And then just recently, i.e. at 9 to 10 o'clock, the candle that closed 15 minutes ago, we saw $84 million in longs get liquidated very, very rapidly. So even the people that are long right now are getting liquidated because Bitcoin is still in that downtrend. Now, I also want to show you some Lux Algo, because Lux Algo has just come out with a new feature. Lux Algo 5.0 is here. Make sure that you turn it on. If you haven't already, make sure you go ahead and turn it on. This right here is very, very powerful. I'm going to go ahead and show you. Just go ahead and delete it. Go to your Lux Algo Premium. Click it right there. Then go into your inputs here. And then I want you to come over here to TP/SL points. Hit on. This is really, really cool, guys. I love this new functionality. You know, TradingView has this functionality, but it's not automatic. It is there, but it's not anywhere near as powerful as this. On TradingView, I haven't used it in a very long time. I'm forgetting where it was, but you can actually, here it is. You can actually set on TradingView your price targets and your stop losses based on where the market is. Problem with that is it's not algorithmic. It's not based on artificial intelligence. It's not based on proven, back-tested technical indicators like Lux Algo, and it also has to be done manually. What Lux Algo is doing right here is it's giving us a strong sell signal on the 4-hourly chart, as you can see here, or it's giving us a strong sell signal on the daily chart, as you can see here in April, and then it's actually giving you your take profits and your stop losses. So it's saying if you're in a short that you entered up here that got confirmed, so you enter the short, then your first take profit would be somewhere in this range. Your second take profit would be somewhere in this range. And the cool thing is this continues to update. So if you were to back test this and go back here, for example, then it's going to show, it should anyway, if we bring up Lux Algo, that the take profits are right here. Now, you wouldn't want to take all of the profit. You would want to start laddering out of your short position, because if you were to move this forward, you can see the take profit is going to move down with it algorithmically. That's really cool, because it means that the indicator is updating in real time to give you really powerful signals. If you want to trade Bitcoin and cryptocurrencies, or if you want to invest in them, swing trade, short-term trading, scalping, anything, if you don't have Lux Algo, you guys are missing out. I've talked to you about how whenever we see a sell signal on the daily chart, well, let's use the weekly chart for an example. I've shown you before on this show how whenever you use the weekly chart with trend catcher, If you use Trend Catcher to confirm your signals, which is the way that it should be done, I'm going to go ahead and turn TP/SL points off for just a second. With Luxalgo, if you turn this on and you use your buy and your sell signals and you confirm them, there have been 13 buy signals in the entire history of Bitcoin. 12 of them have been accurate. That is a 92% hit rate. You're not going to find that with any other technical indicator for trend catching. Make sure you get Luxalgo. You can use coupon code Jebb, Jebb, for 20% off at checkout with the link in the description box down below. I personally use it every single day, and as you can see, it called the current downtrend that we are in, and if you turn that on, it's giving you good, strong take profit and stop loss positions. This is extremely helpful for any traders out there. You're missing out if you don't get this. But what's the point on the short term? Well, on the short term here for Bitcoin, we did break bearish out of this symmetrical triangle pattern, but interestingly enough, just as we've been recording this show, it's jumped back up in here. We scam wicked down, and it looks like it's actually trying to hold this. This is something that Tim was talking about in the planning meeting this morning. He was saying, yeah, we're dropping, but there's no volume. So how confident should we really be in this drop? And the point he was making is maybe not all that much, because the bears are pushing down, but against what volume? It's not a very strong attack. The bulls aren't actually trying to fight back. So of course the bears are going to be able to push us down there. The thing is, if Bitcoin did drop down, it would probably drop down to this support level right here. If you zoom out, I'll show you what that is. That is the long-term downtrend that goes back to our all-time high over here on the 20th of February 2021, intersects with some different touches here, intersects right here, hits a bottom there, hits a bottom there, and it actually acts as the bottom of the falling wedge that we are in right now that I showed you on BLX earlier, that actually gives us our understanding that we're in a bear market right now. That's our market structure support level. That's a really, really, really important level, and I implore you to take it seriously. If Bitcoin were to drop bearish out of its symmetrical triangle pattern right now, there is a strong case to be made that it would hold that support and attempt to bounce. And that's going to lead us into our next segment here in just a little bit, is talking about, are we actually about to see, counter to what you might think, a bullish breakout of this symmetrical triangle pattern to the upside because of all of these different bullish news stories that we have over here? There are some very bullish news stories here. There is also one from the Fed that we're going to talk about that's not so bullish and that would be putting a damper on things. But the point is, there's a lot impacting the market right now. Our overall theory is that Bitcoin is going to have maybe another little scam wick to the downside here to try and shake some of the some of the long positions out. Then we're going to have that rally, and then we're going to drop again. So Tim, what are your final thoughts on the technical analysis here, and how can we prepare ourselves if we do see another wick to the downside, and for some reason it does break straight down out of this? Because, you know, just to take it here for a second, we have somebody in chat, I didn't see their name, but they're saying, hey, take a look at TD sequential out on the weekly chart. We're at a 7. That's true. We've had 9 red in a row. I still think it makes sense that we would have a bounce from here. So what do we do when Bitcoin's trying to break bearish out?
So here's the thing about TD sequential. Just so you guys know, on Club DeFi, the reason I've been using TD sequential recently is because I was doing some deeper research. Like I said, even though we have a course out there, and it is a phenomenal course, all the feedback we're getting back so far is that it is great. We're still learning, and I'm still growing, and I want to keep making it better and better and better. And here's what's really cool. The last 2 strong signals we have on TD sequential on the weekly chart are right here. What is that? That's a bullish 9. And the other one right here, what is that? That's a bullish 9. I actually learned it's not all about watching numbers. It's about watching how the flow of everything is going. So what I want to see develop, just because we see a 7 doesn't mean we have to come down 2 more. As Jebb just said, another key indicator is, even though there's a red 7 right there, the 2 before that, even though there's a green 3 and a green 4, those are red candles as well. What I want to look for right here is either does this weekly chart change, or does the next weekly chart have a engulfing candlestick, right, in which case we see a green. It doesn't even have to be a green 1. It could still be a red 8, and yet that would still be an indicator. TD sequential is not in and of itself going to make all the calls by itself. It's using it along with other indicators as well. So when I see that we're right here at a support level, when I see that there's things we're at the bottom of Bollinger Bands, and here's the thing I've learned about Bollinger Bands, bigger time frames, you watch heavily when we start getting overextended. Smaller time frames, you're almost hoping for overextension because that tells you where the trend is going. What I'm seeing right here is not final. We have to keep watching things, but there's a lot of signs on the weekly chart that are showing that it is time for a reverse back to the upside, as we were talking about that 37, 35, somewhere in that range. But this 7 red right here, along with 9 total red candles, Let's watch how this develops. It's not over yet. Even as we come down to the hourly chart, guys, as much as we like what we're seeing, our most recent candle is green. We're moving to the upside. We're back above 29,000. It's not over. Keep your eyes on. We're going to talk about this in our discussion about how you should be approaching today. In that we came down to support, have a scam wick down here, and now we're moving to the upside. That's a lot of volatility, and if you're don't have a lot of experience, you definitely want to stay tuned and hear that discussion on how you should be addressing the market today and the next couple of days.
Yeah, and I think you guys are going to get a ton of value out of that. So the takeaways from the technical analysis right now, if we do break to the downside, be a little skeptical of it because yes, we are in a downtrend. Yes, we are in a bear market. There is a strong reason to believe that we're going to have a bounce in the next week and change for a couple of weeks. As Tim said, there very well may be a bullish engulfing candlestick on the weekly chart. That would be phenomenal. But don't get too confident in that because it is a corrective wave in a bear market. It would be the second corrective wave in this bear market and it would likely be followed by a final test all the way down to an absolute low of $22,000 to $23,000. The only reason that number is changing from $20,000 to $22,000 is because the 200 weekly simple moving average, which is where we're basing 22, is moving to the upside. It's currently sitting around $22,250. The second takeaway I want you to get from this, make sure you buy Lux Algo, guys. Bitcoin is in a very obvious trend right now. It's in a very obvious downtrend, and pretty soon we are expecting that it's going to have a break to the upside. Here's the deal. If it does that, you can bet your bottom Bitcoin that Lux Algo is going to call it, and it's probably going to call it really, really well. You can see how it called the bottom back over here in May, June, and July. Called the bottom right here. Had trend catcher turn green. Candlestick went green, so we had confirmation on the 26th of July. Until the sell signal, we rallied 34%. If you got out at the top, it rallied 50%. You didn't have any false signals. There were no false signals in here whatsoever. It called it perfectly. Make sure you get Lux Algo today because if you don't have it, you are going to miss out. And when we start going into an uptrend, the most powerful technical indicator for trend catching is going to be giving a signal, and you might not see it, whether it be on Ethereum, Bitcoin, Solana, Avalanche, AVAX, ADA, whatever it is. Get Lux Algo today. Use the coupon code Jebb, J-E-B-B, for 20% off at checkout down below. But we're going to now go ahead and read some super chats. Before we do, smash that like button. We've got over 2,000 people watching. Let's go to full screen. I want to see. We have 2,022 people watching. I recognize that number. Must be the year. And there's only 563 likes. I know we can do better than that. I know we can do better than that, guys. Tim, how many likes do you think we could have in the next 5 minutes?
A lot, and I have made a rookie mistake.
What?
I did not have the super chats thing open, so I got to go get that. Yeah, I got to get that tab open so I read those super chats because I know TZ is getting them in there. So give me we could have 1 million likes though before I get this tab
That's
open
right,
here.
Could. It is possible to have 1 million likes.
Gosh, what do we call this thing? Oh man, I felt like today's show was flowing so well too. We were going. But
hey, today's show is flowing so well. I'll go ahead and introduce the next segment here while he's finding that, guys, and then we will read those super chats. What we are talking about right now is that there's kind of a sus bottom feeling of this bottom. That it doesn't feel right. What we're looking at on Bitcoin is that, there's just not a lot of confidence in either direction right now. The bears are starting to run out of confidence. The bulls don't have a ton of confidence. The point is, what are we doing here? What is Bitcoin? What is Bitcoin doing? It really feels like there should be a bounce, but at the same time, we're in a downtrend. So we kind of want to break down what's going on here. And Tim, feel free to interrupt me when you find that super chat document.
I'm working on it.
Just want to keep it flowing here. One of the main points that we're going to be talking about here in a second is that optimism is dominating the news. I'm going to read these headlines, and we're going to come back and look at them. Market Watch here. It says this eclipse-like event is why Bitcoin could reach $100,000 by next year, says forecaster with a solid record on crypto. What does that mean? We'll be getting to that. Over here at cryptodaily.co.uk, MasterCard executive believes mass adoption of crypto is just around the corner. We'll be getting to what that's about. Andreessen Horowitz, big name in crypto, I'm sure you know him, raised $4.5 billion crypto fund to take advantage of bargains in down market. I mentioned that yesterday. I read that headline and told you guys about that. Cathie Woods, founder and CEO of ARK Investment, continues to show faith in Bitcoin and Ethereum, loads up on 2 crypto-linked stocks. Davos over here, Bitcoinist.com over here said Davos 2022. Ray Dalio calls the blockchain great, says he holds Bitcoin. You know how big of a deal this is that Ray Dalio holds Bitcoin? You realize that Ray Dalio is the billionaire investor that billionaire investors ask advice from. He's like the crown prince of investment in the traditional world, and he holds Bitcoin. That's a huge step of faith. And then we also have Fed minutes pointing to more rate hikes. Right now, the base rate, as you can see over here on NewYorkFed.org, is currently sitting, the effective federal funds rate is at 0.83%. The target range is between 0.75% and 1%. We're going to talk about why we may see another 50 basis points here in a little bit, what that would mean. And then we're also going to talk about how Buick changed their logo. What are you guys doing over here? This just doesn't make any sense to me. Tim, did you find that?
So I found the document. I thought I saw one earlier, but I just asked TZ in chat, did we have any? He said at this point, no. So, what I'm looking through right now is for anything in chat. We have one right here from Freedom Advocate who just said, if Bitcoin drops to 10K, it's done. No one would buy it, and it would fall. As a tech, the whole world is watching this market like never before. So if they think that 10K price, they will not invest. I think what he's trying to say here, because I know Freedom Advocate is here every single day. Thank you so much for watching, man. I think he's trying to say it won't make it to 10, but let's address it. Let's say it did get to 10,000, because there are people calling for an $8,000 price. Jeb, what would you think happens to Bitcoin if that happens?
If it goes to $10,000 or $8,000?
10 or 8.
Yeah, exactly. Stonks.
That's what I would think.
You get stonks. That is a great question, Freedom Advocate. I don't agree that it would be the end and the death of Bitcoin for a couple of simple reasons. Let's just take a look at Amazon. I use Amazon as a case study quite often. If you look at AMZN, Amazon.com, the stock, let's go on the weekly chart and look back at the early 2000s in the dot-com bubble. Amazon, as you know right now, let's go to companiesmarketcap.com. That is a very similar website to coinmarketcap.com. It shows companies. Amazon is currently the 5th most valuable company on planet Earth, worth $1.21 trillion with a T dollars. At one point, I do believe it was the most valuable company in the world, or maybe number 2 behind Apple. Saudi Aramco is number 1. That is a company that is based out of Saudi Arabia that processes almost a quarter of global oil, so it makes sense they're worth $2 trillion. Apple's worth $2 trillion. Almost every single one of these companies is in the top 5 right now. Went through something like what I'm about to show you on Amazon. Amazon dropped, starting here, November 29th of 1999, it dropped 95% until September 17th of 01. In 658 days, it lost 95% of its value. Hundreds of millions, probably at the time billions of dollars, were wiped out. Let's take a look at Cardano as a cryptocurrency case study in this industry. In 2018, the very beginning of 2018, market rallied all the way to $1.32. During the pandemic drop, it was trading below 2 pennies. That's a Luna-style crash, not fundamentally like Luna, but the number, the amount percentage down is like Luna, down 98.61%. I'm in no way, by the way, comparing the fundamentals of Cardano to Luna. Luna's fundamentals are destroyed. Cardano's are some of the strongest in the industry. My point is, it dropped almost 9% to the downside, and then, within the span of 2 years, because of its fundamentals, because of its community, it would go on to rally 16,500% until August of 2021. Now, it's going down again, but the point is, it recovered from that. If Bitcoin dropped down to $10,000, we would only be looking at, and I know it seems weird to say only, but we'd only be looking at an 85% drop. In fact, I don't think we're going to go to $10,000, but if it followed the trend of the last bear markets, which dropped 85% and then dropped 85% again, it would actually stand to reason that we would go to $10,000, because $10,000 is where we would go if we dropped 85%. Again, I don't think that's going to happen. The fundamental landscape is different than it was back then. Trends are only so applicable, especially when you're looking at trends that are taking place over the course of the majority of the lifespan of this industry. The point is, if we go down to $10,000, that's not the end of this space. The fundamentals are just as strong. Why did Amazon and Cardano come back? Because their fundamentals were remarkably, remarkably strong, and price is always downstream of those fundamentals. Great question. Hopefully that was a compelling and helpful answer. Anything else we want to address, or should we keep moving?
We had 2 super chats, but I didn't know. Do you want to go ahead and jump in and we'll read those a little bit later, or do you want to do those now?
Let's see. I think we could probably, let's read those a little bit later. Let's go ahead and jump into our next segment. Guys, we have 800 likes on the stream. We got over 2,000 people watching. Thank you very much for tuning in. If you're enjoying today's show, I want you to do 2 things for me. Number 1, subscribe to the channel. We're bringing you the highest quality technical, on-chain, and fundamental analysis in the entire cryptocurrency space. I really do believe that that's true. In my heart, I believe that we are the number 1 in technical, on-chain, and fundamental analysis in this industry, for analysis, for coverage, for informational and educational content, especially here on YouTube. So make sure to subscribe to the channel. You don't want to miss out on all the content that we're putting out, not just on Bitcoin, not just on Ethereum, but also on Cardano. When Luna dropped on Luna, we talk about Polkadot, Avalanche, all these different projects. But we're also not only on YouTube, we're also on Twitter at CryptoJebb, Instagram at CryptoJebb, TikTok at CryptoJebbOfficial. We're even on Facebook. You might not have known that. We're also on Spotify. This show gets uploaded as a podcast. Most people don't realize that. And ClubDeFi.com. We are all over the place. and we have so much content that we want to bring you. So make sure to follow us everywhere, subscribe and hit that post notification bell, and smash that like button. I know we can get to 1,000 likes here in the next couple of minutes. Let's go ahead and jump into our discussion here, though. Right now, Tim, optimism is dominating the news, which is really interesting because Bitcoin, as we know, has dropped significantly over the last 9 weeks. We've had 9 weeks red in a row. We're down 40% in under 60 days. Why do you think there's so much optimism in the space and in the media right now?
Yeah, well,
Seems weird.
We talked about it the other day.
Full screen.
Yesterday, I believe, when we were discussing, the remarks that JP Morgan is now making about Bitcoin, how JP Morgan is saying it is their preferred investment asset. And they talked about, I can't remember, was it their VP that said this, or I can't remember who, but he was saying when you look at other assets and other equities, crypto and specifically Bitcoin dropped so much more than the others. He thinks that it is overextended to the downside.
Yep.
That's why he is predicting a 28% bump up back to, and he said 38,000. Which is a good level. We said 37. That's kind of funny how close we are on that one. But what his belief is right now is that Bitcoin, because of its newness, because of there's a lot of uncertainty in the market, it kind of got a harsher response than the rest of the market, and he believes it will go back to it. The other thing is fundamentally there are so many things developing. Of course, we're literally months removed from a massive adoption story for use case of Bitcoin with the Strike network.
Yeah.
And now, change one letter. Yesterday, we just saw a difference in the Stripe network. Both of these allowing for advancements of Bitcoin to be utilized for both spending and receiving money, which I believe right now the biggest storyline is for any young business owner. That is massive for you to A, be able to get your transactions done quicker, and B, decide, give the option not only for people to spend money and buy with Bitcoin, but also you can decide, hey, instead of having to take my US dollars and go through a process of turning to Bitcoin, I can utilize this new technology to go ahead and invest in Bitcoin by taking that money and immediately turning into Bitcoin without having a centralized bank be involved to try to confirm or then deny or then tell me what I can and cannot do. I can do this all myself. That's the whole purpose of DeFi. And we're seeing these technologies continue to develop despite what looks like the entering of a crypto or Bitcoin winter or bear market. And so, you're seeing the wrestling. We have recession coming in. We have the US dollar under a lot of pressure, even though it's going up from the Fed because the inflation's so high. We have a lot of FUD in the space, but if you can get rid of all that FUD, the fundamentals are only getting stronger. And so when we've had the last 2 weeks of a lot of downward movement, well, guess what? When something is solid, if it goes down, it will go back up. Now, that doesn't mean it's up for forever. Again, I still am holding to the thought that we will be seeing a bull trap happen maybe sometime late June or July when we get a little closer to that 37,000, and we're going to drop back down to 25, maybe even 22 or 20. But for right now, the pressure, I think, is on the bears to hold it down. I think there's a lot of movement and momentum to say that we're going to be heading back up before we see that dip again.
Well, that's definitely a very strong take right there. Let's go ahead and jump into some of these stories. They're all important, but we want to look at the deeper meta-narrative that's going on here. I want to read you these stories, but I'm more interested in why these stories are being put out right now. Take a look at this. This eclipse-like event is why Bitcoin can reach $100,000 by next year, says forecaster with a solid record on crypto. This article is basically just saying, hey guys, there is a Bitcoin halving coming up in the next couple of years. I believe the next Bitcoin halving is expected to be in 2024. We remember in May of 2020 when the last one happened, and then boom, Bitcoin moonshot. This is saying right here that we could be going to $100,000 in the latter 2023, moving into the direction of the Bitcoin halving event. If you look at the stock to flow model, then we are massively undervalued on stock to flow model. I think I have a second to show you that. So that actually makes a lot of sense. The stock to flow model brings into account something called the stock to flow ratio for Bitcoin. If you look at the stock to flow model Bitcoin, if you use the stock to flow model, I think this will show it right here. I can't remember where this is. If you look at the stock to flow model, is this it? This might be the website I'm looking for. Here we go. It shows you what the fair market value of Bitcoin is based on the tokenomics and the supply and demand curve and the how much Bitcoin is in circulating supply. Right now, it's saying that Bitcoin should be trading at $109,000. It's also saying in 2025 it should be trading at $1.3 million. I've said for a long time that I think stock to flow model was too conservative 8 years ago. It's going to be too aggressive 5 years from now. Right now, we're probably where we should be trading between $50,000 and $100,000. I do think we're undervalued. So that's why it's saying we could be going to $100,000. Very bullish article, but why, the reader might ask, is MarketWatch reaching and talking about something that's going to happen 2 years from now when the narrative is bearish? when the narrative is down, when we've been down for 9 weeks? Why do you think MarketWatch is coming out with a bullish narrative? MasterCard executive believes mass adoption of crypto is just around the corner. Completely agree with that. In the same way, I completely agree with this article that $100,000 Bitcoin is likely in 2023. I agree with the article, but why was it made? I agree with the executive here. Not going to go into too much detail, but basically they're saying, hey, look, Bitcoin is going to have mass adoption, and it's going to have it very, very, very soon. That's great, and I do agree, and I think that this is a big story in its own right. Harold Bossy, Vice President of New Product Development and Innovation at MasterCard, revealed that corporation investors and executives are undeterred by the recent downturn in crypto markets. He added they remain upbeat about the long-term prospects of the crypto space. Totally agree. Absolutely right. Bitcoin's undervalued. It's going to $1 million. We all already knew that. But why are we talking about that now? Why are we getting so much bullish stories out right now? Why are we getting so much bullish narrative? Andreessen Horowitz raises $4.5 billion crypto fund to take advantage of bargains in down market. I mentioned this yesterday. Went out and rose $5 billion almost to go and buy the dip on Bitcoin. Not going to go into the whole article. If you want, it's over on CNBC. You can pause the video at any point and read through this article. It's a bullish story. We like to see it. It's great. But why are we getting this story now? Why is this being made a big deal of now? Cathie Woods, founder and CEO of ARK Invest. Would love to meet and interview Cathie Wood at some point. If anybody has a contact to her, we'd love to have her on the show. I've been looking forward to meeting her for a long time. I'm sure we will at some point. She's done interviews and things with a friend of mine, and I believe that Cathie Wood would love to come on the show. Hopefully we could get her on sometime, but she says that she continues to show faith in Bitcoin, Ethereum. She loads up on 2 crypto-linked stocks. That's great. But again, why is Benzinga.com coming out with some more bullish stories right now? Over here, Davos 2022, billionaire Ray Dalio calls the blockchain great. He says he holds Bitcoin. This is not the first time he said he came out and held Bitcoin. He's already talked about this, if I remember correctly. He's talked about how there's going to be a squeeze and the U.S. dollar is dying, and that cryptocurrencies are going to be part of that future. That's a great thing, but why is it being talked about right now? Well, it's possible. Now, it's speculation. We don't know this. But it's possible that there's a coordinated optimism campaign by media. Again, we don't know that, and it would be wrong of me to assume that that's what's going on. But it is very possible, and this does happen. You are lying to yourself if you think the media doesn't have coordinated optimism and FUD campaigns around a lot of things, not just cryptocurrencies. You'd be lying to yourself if you thought that didn't happen. Could we be seeing a coordinated optimism campaign by the media? And if so, why would we be seeing that, Tim? Why do you think? I know I'm putting you on the spot, but why do you think the media would be so interested in having a coordinated campaign around this? Because it just doesn't make any sense to me. Why there's so much bullish narrative right now? Yeah. Most of the time, the media would be, instead of talking bullish about Bitcoin, be saying doom and gloom, fear in the streets, blood in the streets. It's going to crash, because that's what gets headlines.
You know, wouldn't it make sense that if in a bull market they manipulate the price to come down so they can get more supply, so that they can go up and take their profits? If we're in a bear market, wouldn't it make sense that they would manipulate the market to go up so they could take those profits and then dip down and buy lower? Again, that is a great strategy, and I think even retail investors should use it. You know, don't get me wrong. I think that you should have your HODL portfolio that you do not touch. I agree with Michael Saylor when he says, you know, just sit there. But I do think it's a little bit ingenuine, and I would never say that people should never touch any of their Bitcoin. This is a good season to find a peak and to take some profit and to go down and buy lower. You could, I mean, in this season, if the price gets to 38, and again, we're pretty sure it's going to get somewhere around 37, 38, and then it dips down to 20, you could almost double your Bitcoin holdings. You could almost, we'll definitely be able to double your things like your Cardano holdings or your Ethereum holdings. But, that's a great strategy. And so if that's a great strategy, guess who's going to do it? The institutions and the whales. So again, in the same way we went through a bull market where there were constantly bullish stories being posted, and then we bring the price down, and then bearish stories posted, and they manipulated the market so they could buy at the right levels and then sell at the right levels. They're going to do the same thing with a bear market. So in this case, they want the market to go back up. They want that 37, 38 so that they can take profit there. And that's why I think the retail investors should do the exact same. But what they're going to do is they're going to fake you out a little bit. They're going to try to confuse you. They're going to try to make you get really scared and FUD out at the bottoms and then FOMO into the tops. Don't fall for it. Keep your head on your shoulders. Continue to invest in what you're learning and you're watching. Put it together and make good investments.
That's absolutely right. And here's what you guys need to be keeping in mind. We've talked about how there could be a bullish movement to the upside to $35,000 to $38,000, somewhere in that range. The media is not thinking in terms of, and the mainstream and the investor and the institutions are not thinking in terms of, well, as Matt C just said in a super chat that we'll read in a minute, they're not thinking in days and weeks. They're thinking in months, and normally years years, a lot of times decades. Institutions have a 100-year time horizon. That's something Michael Saylor said as an institution himself. He's got a $5 billion company. They're looking at the next 100 years. They don't give a crap what happens this week. They want to see what the market's going to do over the next decades. Here's the deal. What would be faster is if Bitcoin dropped all the way down to $22,000, completely shattered all the weak hands, got them all out of the space, and then boom, we could start rallying right from there. The institutions don't care about it happening that quickly. They're not on a time constraint. They're not on a time budget. They would rather make more money by allowing the market to go up to 35 to 38. As Tim was saying, sell up here, take some profit, and then buy back in lower. Like Tim said, you go to 38 and you drop down to 20. You can double your money just by selling at 40, which would initiate the drop, and then buy back in with that cash at $20,000. That is what's probably going on here. Is number one, the technicals show that it should happen. Number two, the fundamentals are showing that it can happen. Number three, the institutions probably see that this is possible and so now want it to happen because they stand to gain from it. So the question asked in chat, the question that we're asking, why would the media intentionally manipulate the market to the upside? Because they want to get out maybe so that they can buy back in lower. Again, I cannot say for a fact that there's a coordinated FOMO campaign going on right now, but I can say it's weird. I can say it's weird that 5 different news agencies are all coming out with bullish narratives on the exact same day when Bitcoin is down 9 weeks in a row. Normally there should be a lot of FUD, but as Tim said, in a bull market, you're going to see coordinated FUD campaigns to drop the market so you can buy back in lower. Same thing's going to happen here in the Bitcoin space, because if it went up to $37,000, it's a lot easier to enter a short and be confident that you're going to make money when you're dropping from 38 to 22 than you are when you're dropping from 29 to 22. So that's probably what we're going to see happen here. All of this bullish narrative, very good. It is definitely going to help the Bitcoin space. But what's really driving the space right now has a lot to do with the Federal Reserve. Every month before the Federal Reserve has a meeting, the next one I believe is on June 15th, the Fed minutes drop, which basically outlines what they're going to talk about. The Fed minutes are pointing to more rate hikes that go further than the market anticipates. I'm not going to get into this a whole lot here because we don't have time, but the point is the Fed minutes seem to be indicating that we could see another 50 basis point increase. The Federal Reserve even came out in the Fed minutes and used the word aggressive and hawkish. So it actually would make a lot of sense if we were to see another big jump, maybe another 0.5%. The effective federal funds rate, which is the target, is currently sitting at 0.83%, up from 0.33% as it was back in May before it was raised in early May, not that long ago. We saw that that was taking place, and that is having an impact on constricting the market. It's having an impact on hopefully slowing down inflation. But it's probably not just the effective federal funds rate that the Fed's going to be changing. They're probably also going to be working on the bond buying policy, or the reverse of taking money off the balance sheet, trying to reduce that balance sheet, the Fed balance sheet. That's going to have a big impact on inflation. It's going to have a big impact on money printing and bond purchasing and rates and everything. So there's a lot that's about to happen on the Federal Reserve that's probably going to cause a constriction in the economy, make money a little bit more expensive. You might think, what does that mean? Make money more expensive? Well, when you go and borrow money, you have to pay interest. The higher the interest rate, the more expensive the money is. That's basically what they're getting at. We have the grace of buying a home about a month ago. We're actually closing on the 31st in 5 days. We locked in 5 1/8%. 5 1/8 might be the base rate by the end of the year with the way the Federal Reserve's going. If you don't know how it works, normally a home interest rate is going to be at least 4% higher than the federal funds rate, because what the banks do, the smaller banks, they profit from the difference. They borrow money and then they profit the 4% margin. So if the base rate goes up to 4%, the banks are going to be charging 8 or 9% for homes, which will constrict the real estate market, causing that market to level out. Less people are going to be investing there. It'll cause a constriction in the money supply, meaning less people are going to invest in stocks and bonds. That will eventually make it, one, harder for the retail to find the money to invest, but if they do, it's going to make Bitcoin much more appealing because Federal Reserve interest rates don't have an impact on it. Hopefully you're tracking with me. I know I'm talking about a lot and I'm going very quickly here. What's the point? The Fed will get the final word on this market, and it is probably going to be taking place all the way through the summer. The Federal Reserve and what they're doing with interest rates right now is having such a huge impact on the global economy and on Bitcoin. So the question, is the market still dominated by the Fed? Yes, I think it is. We all at this team think that the Federal Reserve is dominating this market right now. Are we about to see a jump as a result of potential media manipulation and as a result of genuine bullish stories like all of these are? Probably. But is that a bull trap? Also probably, because as I talked about, when the Federal Reserve raises interest rates, in the long term, that's a good thing for the US dollar. In the short term, it's bad for them. It can be negative for the economy because it can cause a constriction in spending. If you're under a Keynesian model, you think that's a bad thing. It's not necessarily a bad thing, but if you're under a Keynesian model, you would think so. That can make it harder for people to find money to invest in Bitcoin and crypto. However, it does eventually make Bitcoin more interesting as an investment opportunity because, as I said, real estate isn't as profitable anymore because interest rates are higher. It's harder to make money in the stock market because stocks aren't just running on free credit like we were in 1929. Hopefully we'll get our act together. We should have learned this lesson 90 years ago, but apparently not. Should you avoid the bull trap that we're going for? You want to be careful. If Bitcoin does start going into a rally up to 35 to 38 like we think it's going to, don't expect that to be the beginning of the bull market. That's not the bull market coming in. That's probably a bear trap. We're going to see more than likely, and I think most likely, another leg to the downside to 22. A lot of it's going to have to do with the Federal Reserve, and you're also going to have that having to do with a lot of geopolitical events like the terrible conflict in Ukraine. Tim, what are some of our key points here? What are some of our things that we can do with this? With the Fed. What do we make of this?
Well, the first thing is, the Fed is kind of, they'd already told us their plan. And this is what we still have to kind of see in the next couple of weeks. Is the price currently already built into that 50 basis points expectation? Because in the last announcement, Powell kind of hinted at 50 is the new standard. He's going to need to see a lot happen before he says 75. And then originally, a month ago, in that announcement we watched, he kind of made it sound like 75 was off the table until further notice. Then I think here, like 2 weeks ago in a interview, he said 75 is definitely on the table. But what we just had announced yesterday from those minutes is for the foreseeable future, we should just be expecting 50. That's not new. That's kind of the feeling we got based off of a month ago's announcement. So therefore, I'm of the opinion that I think that the price is kind of baked in. At this point, it is going to be about manipulation. It is going to be about getting the price to go up, to then take profits, and then bring it back down, and then you could buy low. The Fed is going to have a massive say in that. But here's what I think the golden opportunity is, not only for you as a retail investor, but I think institutions are going to take advantage of this, and I think we're going to see people start to think this way. Follow with me. I was even having a meeting with what do you call him? A friend of the company. I don't know. He's an advisor / friend. Where he was talking about, the U.S. dollar, it's gaining power right now, like nothing else. And I'm like, yeah, let's think about that for a second. The Fed is acting because the U.S. dollar is in trouble. It is being inflated at historic highs, and yet compared to every other currency in the world, it is gaining power. Fiat is dying. We've said that before. We're going to continue to say that. Guess what's not dying? Guess what's an unstoppable train getting stronger and stronger and stronger? And it doesn't just mean price. I'm talking fundamentals of what it is doing, and that is crypto, specifically Bitcoin. Watch this year. Even as the dollar gets stronger and as the Fed is getting hawkish and they're continuing to try to fight that inflation, watch people, as we start to head into a recession, realize, oh my gosh, even if we're slowly fixing the dollar now, it is a broken system. There is nothing better in our current situation of fiat. I need to start looking for other situations to prepare for my future, and guess what that is Bitcoin. People are actually going to start doing their research. Even the article today where we had MasterCard's VP come out and talk about, I think crypto adoption is coming real soon. He talks about the only roadblock right now between crypto exploding and staying suppressed is that he believes a lot of these big institutional executives don't understand the technology. They don't understand the benefits yet, but they're starting to do their research. And as they begin to learn, and as they begin to educate themselves on what the future of currency and the future of technology is going to look like, and that is blockchain technology, watch it just go parabolic. And if you, the retail investor, are not studying right along with them, you will be left behind.
That's right.
So, even though I think we are heading into a recession, and even though the Fed has a lot of pressure, do not count crypto out, because crypto is the future. And even though the dollar is gaining value, the writing is on the wall. It is a broken system of currency, and the law of economics is that money will always flow from soft money to hard money. Fiat is soft, crypto is hard, specifically Bitcoin. Watch it flow. I'm hoping sooner rather than later, but that's what we're watching the rest of this year and the next couple of years.
It's almost like a law of nature. It's going to flow from soft money to hard money. It's always happened throughout history without fail. It takes time, but it will happen. Mark my words, you will see $1 million Bitcoin. That is my stance on that. But here's some of the application of our discussion here, and then we're going to read some super chats. Number one, this could be a good chance to go into a trade because optimism could spark a rally into June. But come the 15th of June, the Fed is going to be very hawkish. They're almost certainly going to raise interest rates by half a percentage, 50 basis points up to 1.23%, which would 1.33%, which would more than likely result in a big drop on Bitcoin and a slowing down of that economy. Few more applications here. Don't ape in. Be very careful about aping into a rally, because if we do rally and we do break bullish out of the symmetrical triangle pattern that we found ourselves in, and we are trading at $32,000, don't think that the bear market's over. To be honest with you, before I would say the bear market's over, I would need to see at least a $50,000 Bitcoin for at least a month. We're a long way away from a bear market being over. Now is an excellent time to trade on markets with short memory, by the way. If you are working in the cryptocurrency space as a trader, there are some phenomenal trading opportunities right now. The technical indicators are working very well right now, especially Lux Algo. That indicator will give you a great idea of when the market does actually start to go to the upside. So if you're looking for a trade and you don't have Lux Algo, if you are a trader, Lux Algo is a paid indicator that will pay itself back in one trade if you're a trader, because it will help you to make good trades. What did I tell you on the weekly chart? Over the last 12 years, it's made 13 buy signals. 12 of them have been powerful and accurate. Make sure you check out Lux Algo. Use coupon code Jebb with the link in the description box down below. And one final takeaway, one final application here. Don't fight the Fed. Don't fight the news. Don't fight the whales, and don't fight the manipulators. Right alongside them. You are not big enough to change the tide of where Bitcoin is going. But what you can do is you can say, okay, man, looks like these manipulators, looks like this news, looks like the Fed is going to move the market in this direction. I have that information. Now I'm going to use it, and I'm going to trade, and I'm going to grow from it. Invest in your education, because as Tim said, a lot of these executives aren't wanting to get into Bitcoin because they don't understand it. What we can do is we can educate ourselves so that we can go out and preach the good word of Bitcoin, if you will, and we can help to educate the masses. That is why we created Club DeFi. By the way, guys, I do have an announcement. Anyone who applied to the last round of beta but was not granted access to Club DeFi can join. Our price is now $25 a month, though. We promised you guys that prices would be going up. It was $15, it's now $25. No one's current price is changing. You were grandfathered in. If you join now, then you're going to be locked into that price. Make sure to check your email. It could be in the spam folder to find the invitation if you were one of the several hundred people that signed up but didn't get a seat in the original Club DeFi beta. So make sure if you signed up and registered, if you're one of the about 500 people that signed up in 20 hours for Club DeFi registration about a month and a half ago, go check your email. And if you can't find it, or you can't figure out how to get in, or you just need some help, or you just want to talk to somebody, email us support@cryptojebb.com. We'll make sure you get in there. There will be more seats opening, but for right now, this is still just talking to the people that applied to be in Club DeFi's beta a little over a month ago. So make sure you check your emails. Otherwise, open registration for beta, and some more seats should be opening up relatively soon. Let's go ahead and jump into some super chats, though, and then we're going to wrap out this stream.
We'll keep the answers brief, but there's some good questions here. Eric Leon said low 20s would be nice. Link is the future. Yeah, Chainlink is one of the ones,
Chainlink's a good one.
that we like because of its use case and the competition.
I agree with everything in that one.
Elliot Locke said crash is such a harsh word. Buying opportunity sounds better. That's true. Can you talk about DCAing while dropping and how that can possibly make you #FinSog?
Absolutely. Dollar cost averaging is phenomenal. By the way, free shout out to one of our sponsors, Hedge. Just interviewed the founder yesterday. You can use that to get some of your paychecks put aside into Bitcoin. Great way to dollar cost average. Check them out. Links below. But also, dollar cost averaging is so important, and that's actually going to be one of our final takeaways, because as the market is moving down, what is dollar cost averaging? You're averaging the cost of your dollar entry, and hopefully it's going down. So you want your average entry price going down, right? Well, if you bought it $1 and then 75 cents and then 50 cents and then 25 cents, your average entry price is at 50, or it's actually at like 60 something. So you brought it down, and it's in the middle. Dollar cost averaging when the market is going down is the best way to do it.
Matt C. said the world's greatest investors never think in terms of days or weeks.
That's right.
They think years and decades. Have a long-term view so that you can take advantage of opportunities like we have right now. And Matt C., even answering that one, because he didn't ask a question there, I made a statement. The question before, DCAing, we've said it before, turning your brain from thinking US dollars. It's so tempting right now to say, oh, okay, my Bitcoin holding used to give me $100,000 and now it's down to $50,000. No. When Bitcoin was sitting at $69,000, how many Bitcoin did you have? Did you have 1? Did you have 0.5? Did you have 0.3? Guess what? Right now, unless you sold, you have the exact same amount. and it's a great opportunity to get more. So as far as DCAing, why should you continue to DCA? Because if your brain is the way it's really supposed to, and it is thinking supply of Bitcoin, it doesn't matter what the US dollar price is. It's all about getting more supply. It just so happens that the lower the US dollar price is, the more supply you can get at a cheaper rate.
Absolutely.
Get your brain there, and you'll be successful long term. Siobhan Goulet just wanted to say thank you. So thank you so much, Siobhan Goulet. Matt C. again said, I wanted to remind everyone to tune into Kelly Kellum's Twitter Spaces tonight with the co-host, Crypto Vet. Amazing guests lined up. That is definitely amazing. Kelly is, talk about Club DeFi and how much we're doing there. Kelly is freaking killing it.
That's right.
I think he's working about 170 hours a day getting stuff put up there. So Kelly is the man. Make sure to go check out his show.
Yep.
Also, Harry, watch for we got some interesting things happening with Harry. Love us some Crypto Vet. Love Harry, and cannot wait to as we improve our partnership and our relationship with him and his whole team. But I don't want to give too much away. We'll announce that here soon. But look forward to good things from him. Carbon 12 Token said, "Love the energy and perspective." Me too, Carbon.
Well, thank you.
Overcome said, what happened to people with careers? What happens to people with careers in banking?
Well, just like a lot of them are leaving right now, they get careers in crypto. There are a lot of people that have left the banking sector. We did a story a couple months ago about a guy that left the Bank of England to go work at a crypto startup. He'd been there for like 15 years, and he left, and he said, forget this. You guys are dying. I'm going to go and jump ship and go over to the ship that's actually still being built and is still growing. That's going to be what you see happen. I'm not saying the banks are going to disappear, by the way. There's some people in crypto that thinks the banks are going away. That's not going to happen. Banks are not going to go anywhere. Their role is going to change significantly. That's what's going to happen.
What's going to happen is the stubborn are going to be left behind.
That's right.
The people that refuse to bring on change are going to be left behind. But who better understands the ins and outs, the pros and cons of currency, specifically fiat currency, better than bankers? So they're going to have a leg up on the understanding as we start to, again, I told you, watch over this next couple of months / years as people begin to educate themselves and shift over. Bankers have a leg up because they work with currency every single day. They understand all the problems. So as they begin to research Bitcoin, they're going to see all the upcoming things and make an easy transition over. They will be okay. They just won't work at a bank anymore.
So here's your takeaway, guys. Here's what I want you to walk away from this show remembering, and everything we said in this show built up to this takeaway. What is it? Number one, stay the course. I want you to be here. I don't want you to be up here super FOMOing. I don't want you to be down here super fudding. I certainly don't want you being down here freaking out and trying to leave the space just because you're a little worried and because your portfolio is down a little bit. I want you to be here. I want you to be on the straight and narrow. I want you to be nice and level. I want you to maintain your peace, your calm, your self-control, your joy, all those things I talked about on Sunday's video. If you didn't watch that video, you need to go back and watch it. It's a very important video. I want you to be able to maintain those principles, those disciplines, those roles, that wisdom, that knowledge, that expertise that you have. But most importantly, I want you to keep a level head, because markets are volatile. They are very volatile, and they are tempting to get freaked out about. Don't let that temptation beat you. Be the same person, be the same amount disciplined, be the same amount of self-control, have the same amount of level-headedness, have the same amount of patience when Bitcoin's at 69 or when it's at 69,000 or $69. If it went all the way down there, could you stay on the level? Because you show your true colors when you get hit. And we all have things that we need to improve upon. God knows that when that happens, that can be scary. Make sure you keep that on the straight and narrow. That's going to be very helpful for you. Number two, appreciate the Bitcoin infrastructure. There is massive amounts of growth going on the infrastructural side of Bitcoin. Don't forget it. Those fundamentals are incredible. And three, make sure you're dollar cost averaging. There are some great deals down here. We think they're going to be even better deals, but that doesn't mean you can't buy in now, because if Bitcoin's at $29,000 and you could again at 22, okay, sorry. Sure, buy more at 22,000. That's not a bad thing that you bought at 29. It's going to be $1 million in 8 years. That's what I think. You're going to see a $30 Cardano. You're going to see a $50,000 Ethereum. No, I'm not exaggerating. I genuinely believe if Ethereum maintains its number 2 position, you will see a $50,000 Ethereum by the end of the decade. Number one, stay the course, stay level. Stay level, okay? Just hang in there. Just keep your head on straight. Don't run around like a chicken who just got decapitated, okay? Number two, appreciate the Bitcoin infrastructure. Understand the fundamentals are just the same. Somebody was asking me to explain the Amazon, ADA, and Bitcoin comparison. Here's the comparison. The price dropped 95 or 99%, but the fundamentals continued to grow, so both of them rallied 16,000%. Why did they do that? Because the fundamentals are the same and getting better every day. That's what Bitcoin is doing. It's having a drop, but the fundamentals are stronger, so it will come back. That's what I want you to take away from it. And number three, because we have confidence that it will come back, why high because of those fundamentals, then what we should do is we should continue to dollar cost average, make the most out of this dip, and not miss out on it. Guys, if you enjoyed today's show, smash that like button. We're a little over time here. That's okay. I know I'm rambling. If you haven't already, subscribe to the channel. This is the #1 cryptocurrency analysis show on YouTube. This is the #1 channel and brand on YouTube to teach you technical on-chain and fundamental analysis. Make sure to follow us on all of our social media, at CryptoJebb over on Instagram and Twitter, at CryptoJebb Official over on TikTok. And again, if you pre-registered for the beta for Club DeFi about a month and a half ago, if you've done that, check your emails and check your spam folders, because you can now get into Club DeFi. And if you have any trouble whatsoever, email support@cryptojebb.com. There should be more seats opening up in the next couple of weeks. That's all we got for you today, though, guys. Before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.
Oh, I got a real good feeling.